All right. Welcome, everyone, to the September meeting of Budget, Capital, and Personnel. It's 9/11. Hard to believe it's been 22 years since a day that changed our world forever. I was fortunate not to have lost anyone that I knew personally, but I did have friends in New York City and friends in D.C. who were watching the Pentagon burn from across the river. And I was on the phone with some of them, and it was a pretty traumatic day. If anybody has an experience they want to share, feel free. If not, let's just observe a moment of silence in memory of the people that we lost. Okay. First on our agenda, minutes approval. Would someone like to move those? Rich moves, Amanda seconds, thank you. Any comments or concerns? If not, are we ready to vote? All in favor? Thank you, that's unanimous. Advisory board appointments? Do you have any? I didn't.
One, isn't there? Nicholas Arce Zavalos?
Yes, Nicholas Arce Zavalos as a member of Workforce Diversity and Inclusion. Do we have to vote on this? Or?
Yes.
Okay.
Move.
Rich moves, Amanda seconds, thank you. Any comment or concern? We ready to vote?
This was recommended by WDIC.
Yes. I don't know, I see that Veronica's here. Do you have any remarks apropos of Mr. Zavalos's appointment to the WDIC?
We're excited to have him.
Okay, good. That's a great recommendation then. All in favor? That's unanimous. Thank you. There are no changes to the agenda. However, there are a couple of additional policies that are not hugely time sensitive, but we can add them if we have time. I just wanted to leave us plenty of time to hear from Insero, and if anybody had questions or concerns, to give them plenty of time to ask. So we just won't be adding them unless and until we have time. Comments from the public, are there any? Nope. Nobody ever talks to us. It makes me sad. County Administrator report. Lisa Holmes, please.
Thank you, Madam Chair. Just a few brief updates. We are in the final stretch of the budget preparation this week. So in preparation for the September 19th legislature meeting where I'll be making the budget presentation. I've been keeping you all informed as we go along, so I don't really have much more to add. You'll be hearing a lot from me next week. And then we are, when I say we, Norma has pulled together a budget training this coming Friday for legislators from 11:30 to 1 here in Chambers, and I think there's a remote option as well, but I think it's optimal if people can meet in Chambers to be able to experience and manipulate the software itself. So looking forward to that. Any other details on that training? Okay, I think that's it for me.
Okay, thank you. Any questions for Lisa or Norma? All right, then, we'll move on to Director of Finance report. Drew is standing in for Lori, who has a family issue that she has to deal with today. Drew, take it away.
Thank you, Madam Chair. Not much. We will be presenting the Insero audit. Just a couple of things that I believe Lori's already reported to you. We're going to have a couple of the policies on the agenda today for cash management and investment policy. Also, I wanted to report, we did get in the second quarter casino revenue. I don't know if Lori let you know. It is down almost 3% compared to last year, but year to date, we are up just over 4%. So it's right in line with where we thought budget would be. Just an update too on New York class, we have about 55 million invested with them. We're currently getting a return of 5.38%. So that's looking very good, and it's been there for several months now. So how long that'll continue. We're working on a number of estates, and that's about all I have. Any questions?
Any questions?
I'm sorry, several estates?
Yes, we're appointed
Okay.
public administrator if someone dies, and we just received another one, so recently.
I know in past years we had some discussion about the amount of time devoted to those estates.
Yes.
And I assume that's continuing.
It is, although we did last year contract with Deborah Wolf Miller, and she's a local attorney that Jonathan and Bill both helped us find, and she has been a godsend to have her really spearhead several of these and do all the filings and that stuff. Still a lot of work on us, but
Better.
helped a lot.
Lee?
Just a question, do you get a percentage on an estate?
We do. It starts out right around 2% and drops to below 0.5%. So not much, but luckily we were the administrator, public administrator for a wrongful death that was done, a number of years ago. And we got some decent commissions from that, which we used to pay Deborah's fees out of. So it works well.
I assume the 2% declining from there doesn't pay enough to cover those on an ongoing basis.
Most of them, like the one we just received, there's more owed than there's assets, so there will be no estate commission on that. So, and there's a lot of work usually chasing down. So last year we did have 2 that we sold houses, the one to Groton. They were in very poor shape, but it did net us a decent amount. So hopefully we'll see a commission on those 2.
Does New York State cover any of this cost? Oh,
Another unfunded mandate.
there you go. Thank you.
The only other thing I have, did you have an opportunity to tabulate how much of our contingent fund we've doled out so far this year?
Yes, I did. And what did I do with that? I know I just had forwarded that in an email. So we're about 65%. The original budget was 1.2 million. We have 812,000 remaining. So more than half of it is remaining.
So what was the original?
1.2 million original budget. And we've had, it looks about 8 resolutions. And
Okay.
then they're down to 812,000.
Thank you.
You're welcome.
Okay, anything else for Drew? All right then, HR Commissioner.
Good
Take it away, Ruby.
afternoon. Thank you. Just a quick report. I'd like to thank you all for your support and participation at the employee picnic, and that was held later on in August. I don't have the final figures yet, but it was very well attended, and so far everyone seemed to have enjoyed themselves. But thank you all for your support and your participation. I think it's important that the employees see, meet, and greet, and have a little time with the legislators. So thank you. Other than that, it's our normal day-to-day HR operations, and I'm yielding the rest of my time for the reports today from Finance.
Well, that's very thoughtful, Ruby. Thank you.
Yes, I thought so.
Anybody
Oh,
have any
Amanda.
questions for Ruby? Mike?
Amanda.
I hesitate to bring this up because it's something brand new, but I've been reading about it, and I'm thinking about our employees and their retirement. We have a defined pension plan, so we don't have a 401K like many businesses have that don't have pensions anymore. But we do have, a 403B, which is deferred compensation, which if an employee contributes to that, that money is not taxed until it comes out after retirement. The problem with that, of course, is that sometimes folks may not be at a higher income level at retirement than they were when they started. I understand there's something new coming out, I think in January, called a 401k Roth, which is like a Roth retirement, like an individual Roth retirement, only it would be allowed for businesses, for example. And I guess I'm just wondering whether that we would end up with any kind of an equivalent, because a Roth makes a lot of sense for folks that are early in their career, because you pay the taxes on your money and then it goes into the Roth, and the income is tax-free at that point. So don't want to go into the weeds with it, but just wondered if there's anything coming down on that and whether that might be something we might be able to offer some equivalent of that to our employees.
I think
I will,
Drew's going to take this one.
We do have that currently. We have a post-tax and a pre-tax for the 403B plan.
Oh,
403B
didn't know that. That's
plans
good to
have
know.
been open to that for at least 10 years now, I think, 9-10 years. And the county did elect for that, actually the administrator, which is through, forgot the insurance company that does it.
Nationwide.
Nationwide, yep. Did that some time ago with us. So you can do pre-tax and post-tax, and you can combine them. So I have a small amount that goes pre-tax and a large amount that goes post-tax personally. So
Okay. Well, thank you for enlightening me on that,
it
Drew.
is a very good option.
Thanks. I hadn't heard of that one before.
As usual, our staff is on top of it. Thank you.
thank you.
Amanda.
I just wanted to thank Ruby and thank the staff for the picnic. It was great, and of course, you all did a great job getting it going, and everyone I saw was having a good time and eating lots of food, and I really enjoyed it, so thank you.
Staff enjoys putting it together.
Yeah, I second that. It was a great picnic. Your staff did an excellent job, as usual. Thank you. Okay, committee chair report. Before we get to WDIC, I just wanted to mention to everyone, our October meeting would fall on a holiday. So I was looking at the calendar to see what was available to reschedule the meeting. And the only likely date, given our very crowded schedule with expanded budget committee and other committees, is Wednesday, the 18th. Does that work for everybody? Can we reschedule to that day?
Works for me.
At 3 o'clock would be, yeah, we can do it at 3. That's fine. Does that work for you, ladies?
I don't see any conflict.
All right, we all on board? So our October meeting will be on the 18th at 3. Thank you. And now I will turn it over to Veronica for a report from WDIC.
Thank you, Madam Chair. Not a lot to report, and I already got to report at the Maine Legislature. Just another reminder, or notice that a notice will be going out soon soliciting nominations for the Leslyn McBean Claiborne Strength and Diversity Award. And this is open to anyone in the community to nominate anyone in the community. Nominees don't have to be individuals, they could be organizations, so just please help spread the word widely. I'm also happy to report that once our new member's appointment that you all passed is approved at the full legislature, we will finally have a full committee with no vacancies.
Congratulations.
Thank you.
Any questions for Veronica? All right, then we can move on to our hefty list of resolutions. Okay, the first one, resolution acceptance of recommendations of the opioid task force, authorization to execute contracts, ID 11881. Can I get a motion on that, please? Amanda moves, Rich seconds. Who's here to present about this?
I'm here. It's Brenda from the
Oh.
Health Department.
Okay, great, Brenda. Why don't you give us an introduction to this, please?
And Zoe Lincoln is here. Zoe, if you would unmute. Zoe was really our staff lead for a lot of the work with the opioid task force. Zoe, can you comment?
Yes, the recommendations were put forth by the task force. They spent several months communicating with stakeholders in the community, learning about the needs in the community, and then they worked together to formulate some recommendations, which are what you have here today. Happy to take any questions, but most of the decisions was made by the whole team, so.
Thank you.
Randy Brown was also on the team. I don't know if Randy has any comments.
Randy, go ahead.
Yes, if you can hear me okay.
Yes.
I'm struggling with Zoom. Yes, there were 15 applicants, and we had a scoring system similar to the ARPA scoring system Zoe put together, and after a lot of discussion and measurement ideas and what we're actually tracking, and I think it worked pretty well, and the scoring kind of laid it out. And we have a diverse group, and I think we picked the right ones.
Okay, thank you. Does anybody have questions? Rich?
I guess I just have a comment. I will support the resolution, so please don't take my comments as any kind of opposition. I think we need to proceed on multiple tracks with responding to the opioid crisis in our community. But I saw the grant proposal from the Cornell University Department of Public and Ecosystem Health to develop a real-time overdose surveillance system and dashboard. And this seems like something that's critically missing in our community, is that we just don't know how many overdoses are actually occurring. We get some impressions from our 911 calls, from emergency responders, from the hospital, but it certainly doesn't seem to be coordinated and brought to a central point for data analysis. And I was really hoping we would advance in this direction so we could know how big the problem is in our community. And I was wondering, the comments seem to suggest that this data proposal wasn't quite what the community needed, but I guess I'd invite any comment on what was here and what do you think we should be doing?
Don't all talk at once.
I'll be glad to jump in. We did like that one. A lot of us liked that one. But we thought we focused more on things that were much more immediate. We figured that was going to take quite some time. And there were already some tracking things that were in place or planned. And we just felt that was going to take too long, and we wanted to be more immediate with our efforts. So that's not that it wasn't a good idea, but that was my thought on it.
Also,
I can also
it
just
may
contribute
not.
on behalf of the group that there was discussion that the Whole Health Department is bringing on public health fellows, and some of the work that a few of them are going to be doing will be centered around some of this data work already. So there was also a discussion of avoiding duplication of efforts as well.
There's some good news. Thank you.
Has this been to Human Services yet? Yes. It has, okay. No qualms there. Okay.
Done.
Yeah, I had a question and then a comment. I noticed in in the attachment, the opioid task force report itself, there were concerns expressed or limitations expressed, things they wanted to control the course of how a particular grantee would implement the proposal. And I am assuming that the contracts you'll be authorized to enter into will give you a mechanism for monitoring and implementing those recommendations. Is that right? Okay.
specified in the contracts.
Okay, great. And then I wanted to ask, are we going to be getting an annual amount pursuant to these settlements? Or is this a one only?
Sure.
No, they are, no, we can't be sure that we're going to be getting the same amounts every year. And they've been diminishing as over time, so.
We talked about that at HHS, and it was pretty clear that this was one time only.
Okay. I have to admit that I realized that the task force could only evaluate the proposals that it received. I was kind of disappointed that there wasn't some one big transformational thing that we could do with basically $750,000, but I guess if this is what was proposed, this is what was proposed. So anyhow, it's not up to us to second guess. I appreciate the work that the task force did. And if that's all the comments, we can take a vote. All in favor? That's unanimous. Thank you. Thank you, Brenda. Thank you, Zoe. Thank you, Randy. And we will move on. Okay, next resolution. Authorization to change labor grade, women, infants, and children WIC program director and increase hours for WIC program nutritionists, whole health, number 11882. Can I get a motion on that? Mike moves, Lee seconds. Who's here to present on this?
That would be me again, Brenda.
Okay, thank you, Brenda. Go for it.
We received our new 5-year award from the state for our WIC program with some changes and the new funding available. We were able to review and really update the WIC program director's job and have it rated. And we had enough funding to increase our WIC nutritionist to 37.5 hours per week. So she'll be on par with our other nutritionists.
Okay, thank you. And as I understand it, this will be revenue neutral, at least for this year.
That's correct.
What about the out years?
It should be fine going forward. Again, it's a contract year in 2024, but I think she has sufficient funds. She also has someone who opted not to increase their hours, so she'll have a little bit of funding left from that position as well.
Okay, thank you. Does anybody else have questions? We ready to vote? Looks like we are. All in favor? That's unanimous. Thank you. Thank you, Brenda. Okay, I bet you're on for the next one, too.
I am.
Resolution, budget adjustment, supplemental, ELC COVID-19 funding, whole health, 4016, ID number 11915. Can I get a motion, please? Rich moves, Lee seconds. Go for it, Brenda.
This is the $1 million grant we received from the state during COVID. It has been extended, and in fact, Frank and I just got an email today asking if we would like to extend again for some of next year. We basically had to move some money around earlier in the year to accommodate some purchases. This will replenish some of those funds, as well as we are back buying and have been buying masks to provide out to the community, so that this kind of cleans up some of the past spending and allows some more spending for the rest of this year. Again, 100% funds.
Okay, so budget neutral, yeah, thank you. Any questions? May I ask, Brenda, if you know, we've been buying masks. As we head into what appears to be a season of more or less routine COVID cases, are we going to be providing tests again?
We did have Department of Emergency Response reached out to the state about obtaining some tests. The prior shipment came, and they expired, I think, last week, and they were not extended. We did ask for additional ones, and I think the commitment was for one more case. We did allow, one of the things we'll allow in our, if we get the extension on the budget, is to try to purchase them if we're not able to get them from the state.
Okay.
So masks and test kits and probably some promotional.
Okay, and do we know, I keep hearing about this new variant, Pirola. Do we know if the tests are going to pick up on that? Or does it pick up anything?
I don't know that answer.
Okay, thank you. Okay, any other questions? Are we ready to vote? All in favor? That's unanimous. Thank you, Brenda. All right, adjustment to the 2023 budget, City County Sales Tax Distribution Agreement, ID number 11709. Can I get a motion, please? Rich moves, Amanda seconds. And I expect that Norma or Lisa can explain this one.
Drew.
Or Drew.
It's an increase in the sales tax distribution. This is an annual adjustment that gets made for the sales tax distribution to the city. It's what we owe them.
Because it's based on a percentage.
Because it's based on a percentage of our collections from the state.
Lee.
The question maybe for Drew. So the city looks good. How about the rest of the county as far as the intake? Are these consistent numbers across the board, or are we seeing something good in the city?
We share with them throughout the year, so if we receive more, they get more throughout the year. But this is actually based, I believe, on the 1%, right?
That's right.
And that's collected in the city, and there's a specific agreement that addresses that, so.
Right. I'm just wondering if you're seeing similar increases in the other collections outside of the city.
We really don't get that much of a breakdown, so we just get the whole county. We get very few numbers from the state.
Okay, so the 1%
we do
additional,
get that.
and it's the overall 1% that allows the city to get a higher percentage.
Yes, yeah.
And these are this is based on 2022 collections.
Correct.
I noticed in a recent sales tax report that it looked like the out of the city taxing jurisdictions were actually doing quite a bit better this year than the city was. So make of that what you will. Mike and then Rich.
That would probably be with the other 3%, not the 1%, right? Because I don't think the jurisdictions outside the city get anything.
No, they don't share that 1%.
At all.
There's the city's special. Rich?
Right to preempt.
I assume the 1% and the 3% are connected, though, that you don't get one without the other. And that if this number is high that's shown in the resolution, it means the county has received more as well. So we're not giving away any of our money. It's a pass-through from the state.
Right.
Essentially. Okay.
For the benefit of anyone who's watching, the chart of the sales tax agreement looks like a corn maze on crack, and you're perfectly welcome to look it up.
The New York State County NISACs group for the treasurers recently did a survey of who shares their sales tax with municipalities. And they did a nice summary, and they said, we did not include Tompkins in our summary because we've included their page from the NFL playbook of who has the ball of the sales tax and who hands it off to whom. And we're not sure where it gets over the goal line, but please see the attach from Tompkins County. So I thought that was very appropriate.
Well, that says it all, Drew. Thank you.
Dave Lucas put those words together, so he gets credited.
Veronica.
I just want to say, as complicated as that flow chart is, it's one of my favorite pieces of the budget information because I can understand it because it is in flow chart form. So thank you to whoever made it. And if
It must have
anyone
been
wants to make
somebody
more
else.
flow charts, I would love them.
And just remember, she's a physicist, so
I was going to say,
takes a
it must have been
physicist to
somebody
understand.
else with a
Okay.
PhD in physics.
I am a math teacher, so, take it with that grain of salt.
I would second that, though, that if you tried to do that in prose to describe,
Oh, no, there's
you
no
couldn't
way.
do it, or you could, but nobody would get it. The flow chart works. It's,
James Joyce could do the prose.
maybe
Okay.
Joycean. Yeah.
Please enlighten the rest of the legislature about that when we have our regular meeting.
Okay, well, I'll leave it to Drew to share that anecdote. Okay, I've lost track. Have we voted on this? No. All right, ready to vote. All in favor? Okay, that's unanimous. Okay, now, next, resolution to update the Administrative Policy Manual, Policy 05-14, Reserve Policy ID 11898. Can I get a motion? Amanda moves, Rich seconds. I note that this policy has been through GO. Do we have questions, comments? Rich?
On page 23, Procedure A, acceptable uses of reserves. Reserves are meant to address unexpected, non-recurring costs. Reserves should not be used for recurring annual operating costs. But it seems like there are some that are expected that you set up a reserve for. And I'm wondering, is this language where we want it to be? And in terms of operating costs, do we count, say, our ongoing workers' compensation payouts and unemployment insurance payouts as operating costs, or are they something else? Because it seems like those are operating, but educate me.
Yeah. We look at, yes, they are operating costs, but the reserve isn't really, the reserve is set aside for those times where we're in trouble.
Don't have enough.
We don't have enough to cover it, right? So that's why it shouldn't be, it shouldn't be used for recurring costs, similar to what we do with our fund balance. Theoretically, you don't use your fund balance to cover ongoing costs. So that's what the reserve is also set up to do, so.
So if I pretend I sound like I know something about accounting, it's not apples in, apples out. You don't pay into your reserve and pay out of it. You're just holding the reserve separately.
Correct. There could be times, though, that the legislature would make a decision that they're going to take those reserves to cover an expense that has an end, a clear, distinct end. So you've got 2 years' worth of payments. You're going to use your reserves to pay that because that's not an ongoing cost. So that's just to be really clear about the differences there.
So should we have an or between unexpected or non-recurring?
No, because when I'm a recurring cost in that example, a recurring cost you have, it's not. It has an end. It might take you 2 years, but there isn't a clear, distinct end. So I'm not sure that an or would make sense or would be necessary there, I should say.
And I think the key is the rest of that section, that the only time we would touch reserves is if there is a poor economic condition or the revenues are impacted. So like when COVID kicked off, there was a delay in state funding in many programs. And if we were in that situation, what this policy allows you to do is it would allow the county administrator, at least in this case, to say, hey, let's go ahead and use reserves to pay the workers' comp claims this month. That money's slow coming back in. We need to make some decisions. And then we come back to the legislature on, okay, we use those. We now have to reimburse those reserves. And how do we do it? So, yeah.
Yeah, and I think that you need to also look at Section 2C. It's just above the one that you mentioned, about how if there are excess reserves, you can spend them. The legislature can decide to spend them. I guess, though, that's limited to spending for a related purpose to.
Has to be related to the reserve that it's been established for, yes.
Right, and
So
that's
our
because
reserve.
these are the reserve policies that Lori educated us about, that once
Correct.
you put a reserve in, you can't just use the money for anything. You've got to use it for what it was meant to.
Correct.
Okay.
Was there some thinking they were, Lori, that she was going to collapse the number of those or suggest that to us down the road?
Well, it looks like there are several that we need to have. Is contingency and tax stabilization all one?
Yes.
Sir, okay. So we've got one for payment of bond indebtedness, one for capital, an insurance reserve, this contingency and tax stabilization, workman's comp, and unemployment. Those are all the reserves that we're creating here.
And those are, much of this language came from a template from GFOA, so this is a template that came from a recognized accounting, not just off the top of our heads, so.
Yeah, I just want to say that as we've worked through these policies this year, and I think we've got a couple more coming, if we get to the small update on the fiscal policy today, that'll be one more. And then we're expecting one on the fund balance next month, that we should be in pretty good shape in terms of having a set of policies that govern how we collect, manage, and spend our money that are almost totally in compliance with GFOA. And I really appreciate the work that Lori and Drew and Lisa and Norma have done, and I bet you helped, Daryl.
Yes.
So, and I appreciate the fact that all of you on the committee have been willing to plow through these, because it's dense at times. But I feel like this is one of the biggest accomplishments we can point to for this year, so thank you all. Anything else on this one? All in favor? That's unanimous. Thank you. And now we'll get to the biggie. Resolution to update the Administrative Policy Manual, Policy 05-15, Cash Management and Investments, ID 11899. Can I get a motion on that, please? Lee moves, Rich seconds. Thank you, gentlemen.
That's the new one, right?
That's the new one that's on your desk. This is the one that was approved by GO last week. I knew that the one in the packet wasn't right because it talked about repos, and we're not authorizing them in this policy, although they are described, the circumstances under which the legislature could consider authorizing them is outlined in the policy. So who wants to talk to this? Yeah, I guess it probably should be.
Deborah, just before we get into the actual policy on the resolution itself, line 12, I think we need to add the word "and" between government operations and the budget, capital, and personnel committee.
Trust Brittany to do. Go for it, Drew.
So I think Lori talked about this at GO, but some of the highlights of this that we added, a number of the definitions were not there previously, so we did add a number of the definitions. The rest of it is really in accordance with GFOA and other governmental issues. The one area there, she said there was some discussions, is towards the end, and that's in section 3 under note D, authorized financial institutions and dealers. Currently, that is set up for Tompkins County, although last year we did add New York class to the listing. So we expanded that to be New York State on that, which does tie into the Appendix A on there. And as Deborah mentioned, under F, repurchase agreements, the second paragraph does say that they are not currently authorized by the county legislature, although if they were authorized, these would be the restrictions. So I wanted to call attention to that. And then I believe from the GL committee, we had a request to add the Cayuga Lake National Bank on the Appendix A on the last page. So, and we're adding the New York Muni Trust just to give us better diversification, so we're not all in there. That's a very brief highlight. I don't know if anyone has any more specific questions. I know a lot of it's already been covered by Lori previously, so.
Where is the language about repurchase agreements?
Next to the last page.
F, I found it.
Yep, under F, yes.
Currently not authorized, okay.
Yep.
Thanks.
I did have a couple of suggestions or questions. In the definition section, we define reciprocal deposit program, but later in the policy, I think it's section 2C2, we talk about oh God, where'd it go? Oh, deposit placement program, which I assume is part of or similar to this reciprocal deposit program, but it's not defined anywhere. And I'm just wondering if in the definition, there should be some language about the reciprocal deposit program and/or a deposit placement program. Okay. Just because if we're going to use a term like that, we should say what it is. Does anybody
Find on the second page?
It's the
Full deposit program?
yeah, but then we don't see reciprocal deposit program in the policy. We see deposit placement program, which I think is pretty much the same thing. It's just if we're going to use a phrase, we ought to define it. I would just say a reciprocal deposit program and/or a deposit placement program, just so that nobody's confused when they run across deposit placement program in the. And then I'm assuming that all the references to the general municipal law are the general municipal law of New York State, right?
Yes.
Okay. I guess that it's pretty safe to make that assumption without defining it. Then I guess the only other comment I had is section 3E2. Starts out, well, the section starts out saying the finance director or their designee is the one who is authorized to contract for the purchase of investments. But in paragraph 2, it says obligations shall be purchased, sold, or presented for redemption or payment by such bank or trust company only in accordance with prior written authorization from the officer authorized to make the investment. That would be the county officer?
I would say
Not the bank officer, obviously.
yes.
So I would just say county I would just put the word county in before the word officer, just to make it clear. Does anybody have a problem with that? Okay. So I guess I need to move to make those two small amendments and see if they're
Friendly?
friendly. Okay. So we ready to vote with those two amendments? Lee?
Just a disclosure, I have business relationships with several of the named banks that are
Don't
in
we
here.
all?
I think we do.
Okay. All right. All in favor? That's unanimous. And I want to thank Finance and Admin for all the work they've done this year on these policies. I know it was a slog, but I'm really proud of the fact that we're getting these done. All right. I'm going to just skip to Resolution H, which is scheduling the public hearing, and then we'll go to Resolution G, which will lead into Wincero's presentation. So if I could get a motion on Resolution H, scheduling a public hearing on the 2024 Tompkins County Budget and the 2024 to 2028 Tompkins County Capital Program, ID 11908. Amanda moves, Rich seconds. Thank you. Any discussion? All in favor? That's unanimous. And now, Resolution G, acceptance of audited financial report for the fiscal year ended December 31, 2022, ID 11904. Can I get a motion, please? Rich moves, Amanda seconds. Thank you. It's on the floor, and I'm going to turn it over to
Yes, with us today, we have Dwayne, who's been our partner this year, and Conrad, who you've seen many times before. I think, Dwayne, you've been with us with a few presentations before.
Yes.
And before they kick off, I'd really like to say that, you know, this has been an exceptional year with Rick's retirement and Lori joining us, and we're still on track. Our single audit is due to be filed by September 30th, and we are on track for that. A lot of times when an organization goes through a turmoil like this, they miss a lot of those dates. And while we've been late, our staff has really come up. Daryl Tuttle has been a key as I've been in and out of the office. He and his staff, just all of us in general, have done a tremendous job. So I wanted to pass my appreciation to them. Conrad and his staff were very patient with us and helped us a lot, guided us, coaxed us, you know, said, okay, we got to move this today, get us these. So they've been great. And with no further ado, I'll do that.
Okay.
Daryl, if you want to move up and join us at the desk in case anybody has questions for you, you're welcome to.
You may have the answers.
Okay, great. Well, thank you all for a few minutes this afternoon to review the drafts. As I noted, these are in draft form, so there's a few loose ends to tie up. But as Drew said, we are on track to get it done and filed by the end of the month on time. So I'm going to kind of walk through the different documents, explain what each one is, what it does. Hit a couple of the highlights of some of them. I'm going to turn it over to Conrad to talk through the numbers pieces for you and give you some of the financial information. So the document that you have right on top of your pile is the executive summary. This is something that we've kind of crafted over the years. It takes all of the hundreds of pages and boils it down into a few pages of really kind of the most relevant information. It is very high level. There's not a lot of detail in there, but it does give you a sense of the overall audit results, and it also gives you some nice financial kind of trend information. And I know Conrad's going to use that in some respects once I turn it over. So, right below that is a 3-page letter. It's headed communication with those charged with governance at the conclusion of the audit. Auditing standards require that we communicate certain aspects of the audit with you at the conclusion. It doesn't have to be in writing, but we've chosen to do it that way. Most of this letter is boilerplate language, nothing to be too interested in. But I did want to point to one thing on the first page, which was a fairly significant change this year. The county adopted a new accounting standard on leases. This is not something specific to the county. This is across the United States. All municipalities had to change the way that they accounted for leases in their financial statements. essentially any lease that was longer than a year in length is now reported on the government-wide financial statements. Leased assets, lease liabilities. So that was a fairly significant undertaking, not only to record the adjustment, but also just to figure out how many leases do you have, how many are significant, how many are longer than a year in length. There was a lot of work put into determining that information. So that is a pretty significant change in the financial statements. Below that communication letter is a management comment letter. That's also a 3-page letter. We use the comment letter for a couple of things. We want to make sure that you're aware of future changes in accounting standards, auditing standards, anything like that, that we think you should be aware of. So the bottom of page 2 has a list of upcoming accounting standards changes, some of them more impactful than others. And then at the top of page 2 is mention of a couple of comments, things that we did note during the audit process that we wanted you to be aware of, a couple of adjustments that were made during the audit process. One at the top to, there was a transportation, some federal revenue was not accrued, was adjusted during the audit process, and it brought that federal revenue in line. And then secondly, the other item below it, the Rescue Plan Act revenue. During the year, the county spends money that was received under the act. Once that money is spent and earned, it comes out of deferred revenue, gets recorded as revenue, and that moving those monies out of the deferred revenue into the revenue didn't happen in some respects during the year. So that was also adjusted during the audit process to reduce the deferred revenue and record revenue to the extent that that money was earned. Below that is a state transportation assistance expended report. So this one fairly unique state report, New York State DOT, for several years has had its own requirement. If a municipality, number one, has a federal single audit, which you do, and number two, spends more than $750,000 a year in New York State DOT funding, which you do, you're required to have this additional report prepared. This report is specific to state DOT programs. And this report identifies no significant deficiencies, no material weaknesses, no non-compliance with regulations over those programs. The real important page in this report is page 4. That page lists for you the different New York State DOT programs that the county spent money in, total of $11.6 million. Roughly 3.9 million of that was CHIPS and the related PAVE New York, Pave Our Potholes, Winter Recovery, all of those programs. Those programs combined are the ones that we selected for testing. So we did some additional testing over those programs and had no findings. So this report is a clean report. And then finally, the very bottom of the pile is the financial report itself, the bound packet. This includes the opinion. It includes the management's discussion and analysis, all of the financial statements, the notes, and all of the supplemental financial information. Some of that information is required by accounting standards. Some of it is required for single audit purposes. But that entire document is all there. And with that, I'm going to turn it over to Conrad. I'm going to let him kind of walk through some of the numbers and open it up to any questions.
Thank you, Dwayne. So as Dwayne mentioned, I will be speaking more so from the executive summary. I will have a couple highlights from the big bound packet towards the end. But we'll start with page 1 of the executive summary. Dwayne did go through most of the documents. I will start more towards the middle of the page under the single audit uniform guidance report. So whenever a municipality expends over $750,000, they are required by federal guidelines to have a single audit prepared. This year, the county spent $36 million in federal expenditures, so a little over that threshold. Now, with the county, we had to then test 20% of these federal expenditures. So for this year, we tested the Coronavirus State and Local Fiscal Recovery Fund, the SNAP program, Highway Planning and Construction, as well as the Airport Improvement Program. We selected those as our 4 major programs for testing this year. As I will go on to page 2 of the executive summary, and we will start speaking about the fund level financial statements at a high level. Pages 2 and 3 will deal with the general fund, sort of your operating fund for the entire county. As you can see, in 2022, your total assets did increase by about $19.2 million over the prior year. And really, since 2018, you've more than doubled what you've had in total assets. A large portion of that is in cash. As you've seen, it's gone from $30.1 million up to about $87 million. A large increase, those large increases are really more attributable to the last 2 years. You've actually outpace your expenses with a lot of revenues in the last couple of years, as well as the influx of money that you've gotten from the coronavirus program that's being held into deferred until you have the expenses to then release those funds from the deferred revenues into the actual revenues. We also see that you're due from other funds, which would be from your transportation funds, your capital funds, was down about $3.6 million. Due from state and federal governments, amounts are up slightly, about $2.6 million as well. But really, the big portion for that is cash on a yearly basis for most years. When you start looking at liabilities, your liabilities also increase over the prior years, about $7.6 million. The largest increase of that is that deferred inflows of unearned revenues, which houses your coronavirus monies until the expenses have been made. That increased about $11.7 million. There are some other adjustments in there that had to do with the new pronouncement GASB 87, as Dwayne mentioned, and we will be going through that a little later in our presentation. When we look at fund balances, restricted fund balance did increase over the prior year from $717,000 to about $2.3 million. Your room tax was the biggest driver of that. That was up over $2 million. Stop DWI was around, I think that decreased about $40,000 down to about $243,000. And capital reserve stayed the same at about $25,000. We do have to make an adjustment to the assigned versus unassigned. There was a little miscommunication where the line items, so we will be taking the assigned fund balance from that $61 million down some and put the rest of that money in the unassigned fund balance with an adjustment that I will get the final numbers from Daryl at year end, but I think we'll be reducing that to about the same level or a little lower than what the assigned was in the prior year. As we go on to page...
Can I ask a question?
Well, that's a $50 million adjustment.
Yeah, there was some sort of calculation error that I think was between myself and Daryl that we made a little mistake on. If you want.
Okay.
I was trying to follow some spreadsheets that Rick used to do all of this, and we missed a piece of it where it got put into assigned rather than unassigned based on the budget of 2023.
So those numbers are just going to pretty much flip back to what they were in 2021.
Pretty close, yeah.
Okay, great.
A little above, I believe.
Yeah, you'll see an increase.
Okay, thanks.
So as we do go on to page 3, now we take a look at your revenues versus your expenditures for the last 5 years. So your revenues were up over the prior year about $6.2 million. The large increase in there was your sales tax. You did receive a lot more sales tax from over the prior year. You were up about $7.2 million in more revenues. Now, when we look at sales tax actually comprises 35% of your total revenues for the year. So that is a large driver as to where you'll be come year end. Another large driver will be your revenue, your real property tax revenues, as well as your state sources and your federal sources. Your federal sources were down about $5.1 million. That was a lot of the FEMA money and the ECHO grants that you received in the prior years were down about $10.5 million. However, you did use some of your coronavirus funds, so that actually increased you about $4.9 million for that federal line source. When you look at the expenditures over the year, the expenditures did increase about $11 million over the prior year. The biggest increase we saw was general governmental support. As your sales tax increased, so does your sales tax distribution. That also increases over the prior year, and that's what we did see. Also, your public safety did increase. There was a large increase in the sheriff-related expenditures for the 2022 year. Your transportation did decrease about $6.3 million, and that was bus operations. That did decrease about $6.3 million.
Excuse me, can I ask you, under
Yes.
revenues, you've got a list of revenue sources. Where is sales tax in here?
Non-property tax items, the third line down.
Okay, thank you.
And I'm assuming under the expenses, with that increase, that we've got an awful lot of one-time in there, carryover from the COVID relief funds and so on. Is that fair to assume? I don't know that there'd be a way to even break that out.
Some of them are there. Also, we had as you may recall, the settlement with the road patrol in 2022, and that was salary and benefits over $2 million, $2.5 million. So that was a pretty big payout because they went back. How many years did that go back?
2016?
Yeah, 7 years, I think.
So when we look at this a year from now, we're going to see those expense lines come back down to probably 2021 levels, thereabouts.
Yeah, or if you look back actually into the 2018, 2019, you'll see a lot more consistencies with those. As Conrad mentioned, if you look at the federal sources of revenues, we trucked right around 18, 20 million there, and then it beefed up. So while we have seen a decrease, we're still above where we were pre-COVID.
And you're not booking expenses that are carrying over from the pandemic until they're actually spent out of the assigned or unassigned funds that they're put into reserved?
Yes,
Correct.
Yes, the expenses aren't being shown until they actually do happen. No.
Okay. Thanks.
Any other questions? So I will then turn to page 4, and we will have a discussion about your capital projects funds. So within capital projects, there are about 15 or so different sub-funds that is taken into consideration here, from TCAT to building improvements to airport construction, as well as road, among many others. So when we look at this for the current year, your total assets did decrease about $2 million. The large portion of that was the DOT grants. There was not as much DOT-related grant work done in 2022. That accounted for about $2.7 million of a decrease in the current year.
Was that because of the triennial review? Was that related to our triennial review woes, or is this something different?
I believe there was more of the cash was actually received prior to year end as to why there was not as much receivable of a receipt at the year end.
And a lot of it was actually the airport expansions had a lot of receivables in, and we've collected most of that now that those are fairly complete. So if you recall, that was almost a $40 million renovations over the years, 2019, 2020, 2021. So we've collected most of those that were due us.
Thank you.
As we look at total liabilities, your total liabilities went from 18.9, almost $19 million down to 10.3 million. What we see here is your bond anticipation notes, which is your short-term funding, went from 16 million down to 6.9 million. 13 million of that $16 million in the prior year actually went into new long-term funding. There was a 13 million plus dollar bond in the current year, and the other almost 2 million of that was used to renew a new short-term funding for about $6.8 million. We'll also see that there was $1.6 million in unearned revenue. In the prior year, there was almost $1.7 million of the coronavirus funds in the capital projects funds that was earmarked for expenses that actually did happen during the 2022 year. When we look at your fund balances, what we saw was your restricted fund balance did increase from $541,000 to about $2.4 million. A lot of that has to do with the unspent debt proceeds. So with that, we do have a calculation to see what amount is still unspent, and that came to about $2.4 million. Your committed fund balance is, for certain funds, the legislature years ago made a determination to commit the funds instead of assigning. That would be part of the Transportation Capital Projects Fund, as well as the Home and Community Capital Projects Funds. The reason for the increase is there was a large revenue over expenditure increase over the prior year. The assigned fund balance only increased about $500,000, and the deficit was actually down slightly, about $200,000 over the prior year. As we look at the revenues and the expenditures for your capital projects funds, we can see that the revenues were down from $6.5 million to $3.2 million. There was, as Drew mentioned, along with the collection of a lot of the monies for the airport capital projects, those projects were actually waning down towards the end of 22 and towards the end of 2021 into 2022, as to why we saw the big decrease in those revenues, and the expenditures also did decrease. However, what we did see was an increase in your expenditures over the prior year, and that had a lot to do with your building improvements. Your building improvements went from 1.1 to 7.3. I believe that Drew can speak on the exact building improvements. I think some of that had to do with the new expenses for the new buildings that you're...
Some were related to that, but a lot more is to the green facilities plan that we've been working on. So some of this was actually, though, the acquisition of the 2 properties, I believe. Yep. Actually, the 4 properties, 5, however many we acquired. So.
And we bought those. I thought we bought the 2 buildings in 2021.
February of 2022.
Oh, okay. Huh. Sorry.
So the other increase that we did see was in public safety and in transportation, and those were for ongoing projects in those 2 functions. As we go down further in your other financing sources, the big increase there is the proceeds of obligations for new serial bonds. This has to do with that $13 million I mentioned on the previous page. So 13 million of that came out of the short-term financing, and then you did have another $5 million in funds added onto that for the new serial bond. As we go on to page 6, we will talk about your debt service fund, which is usually where you pay all of your debt service amounts, your principals and your interest out of. Your assets only increased slightly. Your deferred inflows of resources, which are tied to some of the payments that you do receive for certain buildings that you do rent out or mortgage out, did decrease. And your ending fund balance was only about $110,000 higher than the prior year. As we look at the next page for your revenues and the expenditures, once again, those are more in line than what we've been seeing with other funds in terms of your expenditures. Your revenues were around the same. Your expenditures did increase slightly for the increase in the amounts that were paid in principal for your debt. The interfund transfers were down slightly from amounts that were received from the capital projects funds, and the premiums and obligations, which are related to any new debt, whether it be short-term or long-term, was down as well.
So excessive revenues and other financing sources went down about 1.3 million.
Yes, so the interfund transfers is what I was meaning. So that went from 6.4 down to 5.3 million.
Okay.
That was the amount that was in the prior year. There was more amounts that were paid to the debt service fund from other funds, more so the capital projects funds.
Any questions on capital or debt service at this point?
So when we look at page 8 is really a catch-all for your special revenue funds. Now, your special revenue funds include the refuse and garbage, the transportation CT fund, which is your airport, the special grant fund, the road fund, as well as the road machinery fund. I believe those are the 5 funds that make up your special revenue funds. So when we look at that, your assets did increase about $2.8 million over the prior year. The main driver of that is your receivables, which did increase $3.2 million, and that has to do with the new GASB pronouncement. In addition to the amount to being a lessee, the county was also a lessor of many properties, and we did have to account for that, not on the government-wide statements, but on the fund level as well. So what we also saw is that in your total liabilities, you did also increase about $2.6 million. A large driver of that was the deferred inflows of resources, which is the other side of the lease receivable. So we have the lease receivable and we have the deferred inflows of resources for the leases due to GASB 87, which I'll go over in a couple minutes. Other than that, the amounts were fairly in line with what we saw in the prior year. When we look at page 9 and look at the revenues and the expenditures, what we saw over the prior year, your revenues did increase about $1 million. Your departmental revenue was the big driver of that. That accounts for 45% of the total revenues of the special revenue funds. That did increase by $1 million. There was community development increase and an airport increase that drove those two. That drove that revenue from 7.2 million to 8.2. Yes.
Okay.
Yes, that was. So the 1 million increase in departmental income was, I believe, most of it was the airport. We had a $1 million CARES Act grant that was a multi-year grant, and 2022 was the last year of that grant.
The expenditures for your special revenue funds did increase $3 million. One of the biggest drivers we saw was a $1.4 million increase in your transportation. that was airport-related as well as road machinery-related. Those two items accounted for about $900,000 of that increase in those expenditures. And then we also saw about $1.3 million in your home and community service. Part of that was refuse and garbage, and the other part was supplemental housing out of the special grant fund. That was the other driver in that specific line item as to your increase. The other finance and sources.
Actually, can I jump in? I was curious, how can we have no debt service from 2018 to 2021, and then we have some in 22?
So that debt service of $8,000 is actually also related to GASB 87.
The 31,834?
Yes, it's, I will go over that in just,
okay.
I'm sorry about that.
Yeah, that
So what you'll see and I will actually go back because I may have overlooked those, is in other funds you have seen certain amounts that are starting to come through, such as in the general fund. If you look back to page 3, you'll see $335,000 in debt service. What you'll also see is proceeds of obligations of about $673,000. That's also related to the new GASB pronouncement.
Thanks.
So GASB just does this to confuse us, right? Mm-hmm. Thank you.
So it's the same payments, but instead of being recorded in operating areas, transportation expense or whatever, now it's all being considered debt service. So those payments move from one category to another.
So lease payments now are debt service.
Correct.
Is this an echo from Enron? I mean, isn't that where the discussion started?
It was one of the things that they did, yes.
Yeah, okay.
So as Dwayne did mention, it is part of what we have to do is some of these expenditures may have been seen in other expenditure line items. We had to move them from those expenditure line items down and create that service line item. So going forward, that is a line item that will be consistent. It may not be the same amount, but you will see that going forward. Page 10 of the executive summary really goes into the government-wide financial statements in a little detail. We're taking a look at the net position of the government-wide. So total, once we take into account all the funds, plus we've added in all of your long-term capital assets, such as the fixed assets. In the current year, we also had your net pension asset instead of a net pension liability. We came up with a total net position of $186 million. Of that, 95% of that, or $177 million, related to your net investment in capital assets, which is your capital assets, all your fixed assets, your equipment, all your buildings, plus any of the intangible assets associated with the new GASB 87 as well, less all the associated debt and liabilities associated with those assets. That's what makes this net investment in capital assets amount. Your restricted fund balance is about $10 million, up about $1.5 million over the prior year. And then the remainder is a deficit of $1.3 million, which was down from a deficit of $2.2 million in the prior year. What we've also included is a reconciliation to see what your unrestricted net position would look like without the actuarially determined amounts. Now, the actuarially determined amounts have to do with the GASB 68, which is the net pension liability, which is the state system, and then GASB 75, which is the other post-employment benefits, which you have on a yearly basis as a liability that you pay on a yearly basis. This liability is, I put it into terms of if the county were to in any way cease operations, which it won't, this is what the amount of liability that may be due, depending on what the factors such as the discount rate and other factors are. Now, without these two amounts, you would actually have a positive unrestricted net position of $89 million.
Does that include fund balance, or is this in addition to fund balance?
This includes the fund balance at the fund level.
Okay, thank you.
Any other questions?
So I guess I have a question.
Yes.
So if that net position includes fund balance, but the fund balance appears to be higher than that, is that because it's net of these, the GASB 68, the GASB 75, and maybe some other things
Yes, such as the long-term, we have to take into consideration items such as your long-term debt and your fixed assets as well.
Okay, thank you. Questions?
I do have a couple more items that I'm just going to go through with you in the big booklet. So we'll actually start on we'll go straight to page 60. And I know that both Dwayne and I have mentioned GASB 87 a couple times, but if you look towards the bottom of page 60 and more so onto page 61, this is where we really delve into detail about how GASB 87 really came about for this county as well. So with the work that the finance department did as well as our offices, we did go through most of your contracts, not just leases, any sort of recurring payments that could be perceived as a GASB 87 type lease. We went through all those, made a determination as to whether it fit the criteria that we were looking for. And in all, if you look at page 61, from a lessee standpoint, there are 25 leases which the county was a lessee on. Now, we may be in a situation where there is no overt contract that gives you a discount rate as well. So we would then have to do is try to impute what discount rate was applied to this to then have what the principal amount was versus the interest amount on the amount that was paid on a yearly basis. As you can see, right now we have an outstanding balance of $1.3 million as a county come year end for all the leases that you are paying on. Now, this amount will change from year to year as you add more leases or leases become due and are removed. If you go on to page 62, the other side then is where the county is then the lessor, where you are receiving payments such as rents from other entities. A lot of that will have to do with the buildings, some of the land, and some others such as the radio towers. Now on this, the county now has a receivable of almost $3.3 million. Now, as I was saying, the difference between these two is that when we talk about the lease payable, that is an amount that we are showing only on the government-wide financial statements. That has no impact on the governmental funds on a yearly basis. We take into consideration that on the government-wide level. What we then, when it comes to the lease receivable, then we actually show the receivable as an asset on the books of the funds themselves. So we had to we worked with the finance department to create the entries to show the lease receivable as well as the deferred inflow of resources pertaining to those specific leases that you are the lessor of.
Let me ask a question there. So we're going to see this really in two places because you've got a yearly amount of either income for lease revenue you're receiving and a yearly amount you may be paying out on something, but under these reports, you're valuing the overall lease for however long the lease period may be. Mm-hmm. And how do you account for automatic renewals, or do you just take a certain period of time?
If there are automatic renewals, those are considered part of the lease. If there is question, I guess I'd say, as to whether the lease is going to be renewed, they are not.
Some of those are 99-year leases.
Mm-hmm.
Okay. But so that would show an awful huge amount of value for something moving forward. Okay, thanks.
You feel better or worse?
Well, having negotiated a lot of those 10 years ago, I didn't realize they'd have such an impact.
Thanks, Lee.
Was the revenue I was looking at.
I see the one at the top of the list here on page 62 that I negotiated with the county for the Alcohol and Drug Council. I think I did that back in 1991 or something. And there it is.
And there's several in here for a building we're going to tear down pretty quick.
Don't even start.
Yes, Lee, we had a lot of fun looking at your tower leases. So
My legacy.
took quite a bit of time and quite a bit of digging, so. Both the income we're getting off from the towers and the expenditures for the towers, so.
15 years age to them now, so.
Are there any other questions?
On this or overall?
I believe that I would.
I'm good.
Mike looks like he's got a question.
Well, I'm just trying to think about our library. Do they do their own audit? Are they part of us? Do you folks do the audit for them or a different accounting group does that?
For the county library?
Yes.
You mean? We do the audit for the library.
Yes. They are.
Is that done annually?
Yes. And they are actually presented on these books. If you look at page 6 of the big, page 6 of the big booklet, they are presented as a discretely presented component unit of the county itself.
The column right in the middle of the page.
Yeah. Okay.
Would be nice to see a copy of that audit when it comes out from time to time. Amanda, do you have it?
I sent it out about a month ago to everyone. Yeah. So Randy
Okay.
commented on it. I can.
Gotten that, thank you.
Yeah, I can send it out again.
Is that why you had your hand up? Okay. Anything else? Okay, so let me understand this. There's a resolution for us to accept the audited financials, but as you've said, this is a draft, so it may change. So how do we proceed? You know, if we accept it, I mean, we have to have the resolution because it has to be accepted by the legislature. But I guess we're going to vote on this subject to corrections, right? Is that okay with everybody? Rich?
Well, I'm curious if the legislature as a whole considers this next Tuesday, is that enough time to get it from draft to finished? So when they vote on it, is it complete?
Yeah, we'll have the corrections before next Tuesday, correct?
Yeah, it sounds like you guys have them narrowed down to some pretty specific items.
Yep.
Okay.
Oh, for that, yes, we do.
Okay. All right, with that understanding, are we ready to vote?
Are we accepting an opinion on this in addition to the analysis?
You're accepting all of the documents,
I think there is an opinion, right?
which would include the management comment letter and the communication letter, yeah.
Has this been moved?
Yes, it has. Are we ready for the leap of faith? Okay, all in favor? That's unanimous. Thank you, gentlemen.
Thank you.
All right. Okay, we have a half an hour left. So as I understand it, there are a couple of policy resolutions that admin would like us to consider, and Brittany's going to pass those out. And you guys, unless you're just riveted by our policies, are welcome to leave. And again, we very much appreciate the services you provide us year after year.
Thank you.
Do you want a motion to add these to the agenda, Deborah?
Yeah, I guess we're going to have to do that.
Moved.
Now, this is a small but important, this resolution would make a small but important addition to our fiscal policy, which we recently updated. But this will provide guidance and a mechanism for admin to consider budget requests from outside agencies that have heretofore not asked for county assistance. If we, yes, we can add it.
Deborah, I would second if nobody else had.
Well, I guess first of all,
Put it on the
do
floor.
we need, ladies, do we need a motion to add this, or are we okay with going forward with this on a consensus basis? Okay, great. So if somebody would move this resolution to update the Administrative Policy Manual, Policy 05-02, Fiscal Policy ID number 11900. Rich,
Lee moved.
Lee moved and
I'll
Rich
second.
seconded. Okay, it's on the floor. Lisa, you can, this also went through GO, I think. Did it not? Yes.
It did.
Okay.
So this is not, I'm sorry, what was just handed out is not, doesn't include the changes that were at GO. I can.
Okay, so that's not going to be particularly helpful, is it?
Were they extensive?
No, I can talk through them because I think 3 of the 5 of you were on the GO committee, and I believe
Yeah, I listened to it.
So I can, it's basically a couple of paragraphs, and it's under section 3.03, item C. And it's supplemental funding for new, changed, or expanded programs. And this was to address questions that kept coming up about agencies who were coming to the legislature for funding that aren't already in the funding process, or in the county, that don't have a place already in the county budget. So I can just walk through the proposed changes. So what I had added under here was that through the strategic operations planning process, the county as an organization assesses community needs and priorities. Through the county budget process, the county administrator and legislature determine the appropriate level of funding for programs to meet those needs.
All right, just so I'm in the right place, tell me again where you are. Excuse me.
This is section 3.03, county administrative review and recommendations. Under item C.
I don't have an item C.
Oh, okay. I've got the GO agenda out, and we have a blue line version of that.
Yeah. So it was in the GO agenda. Right.
That would be very helpful.
Thank you.
So this is a section that's just not in here at all?
I'm not sure why this version got cut off, or, yeah, so this section, this is additional language in the existing section.
Yeah, because I noticed that the printout that we have goes from section 3.03B to the next page, which is F through G. So it could be we're just missing it.
Oh, it could be that pages got cut off.
So what we're talking about here, isn't it, and maybe that's what you said, but an agency, for example, coming in to a legislator toward the end of the budget process and say, we've got this really great program that really needs an over target, and it gets put in front of the legislature at the last minute for spending, may not be reviewed by Human Services Coalition or other group. And isn't that what we're talking about here?
Yes, we're talking about it, and it was really thought to be at other points in the year. Yes, that because it had come up a few months ago with, for instance, the Chamber of Commerce, Arts Partnership, Reuse, other entities. So it's really, what I wanted to state in this is that it's really the purview of the legislature first to determine the community needs and develop to see that there are services and programs either through departments or contracts that are meeting those needs, and that we're determining the funding levels for those needs. Then if another an outside agency is coming forward stating that they have a need for funding, it's really incumbent on the legislature and the county administrator to see, well, why aren't they already included in the scope of the county budget, in the array of services that are already provided, and to consider that, and then to utilize, where possible, a vetting agency. It could be our own county departments, or it could be the Human Services Coalition, it could be the Strategic Planning Tourism Board, if a vetting agency exists. And also that non-routine requests for funding that aren't otherwise supported through the budget should be rare and based on emergent concerns. That these requests may be presented to the appropriate legislative program committee, but should be submitted to the county administrator. And then the county administrator would also notify this committee, Budget, Capital, and Personnel, in writing of those requests. And the county administrator would consider those requests for inclusion in the budget based on the evaluation of the vetting process. And that's how that would work.
I'm reading it as we go, but I don't see a timeline, we had this conversation back in the spring about some of the fallout from the over targets last fall, and I can remember Rich or somebody throwing out June 1st or something as a time to alert you to some needs that we talked about it in general, and I think we were talking about food banks and the EMS program, for instance, being put into the pipeline. Are you comfortable leaving it somewhat open here, or incorporating it into your, budget calendar in some manner? Where might that urgent need pop up that we'd be put under pressure to address it later rather than sooner?
I hadn't considered a timeline, but for inclusion in the county's budget process, I agree, the sooner is always the better.
Yeah, it's something to think about.
This is different than, say, a legislator deciding they're going to introduce an OTR.
Yes.
And that's still allowed.
That's still allowed. This year it will be
Frowned upon?
discouraged.
But is that process in here somewhere too?
I don't think that's part of the fiscal policy. I think that's just part of our budget process.
I'm sorry, could you use your microphone?
I'm sorry. No, we did add some, I don't want to move this because people are using it, but we did add something in the fiscal, when we made the first change in the fiscal policy that talked about,
You know where that is?
Can't recall.
Yes,
But it's through the legislators, they find their
So-
ways into that discussion.
It is, I mean, it's still allowable in the legislative initiatives, but I can't recall now. It's been a while since I worked on this.
structurally, though, when the county administrator is developing the budget, that's when the over-target requests from departments or agencies come in, and that's when they would be potentially considered to be part of the recommended budget to the legislature. Once the budget is recommended to the legislature, it's the legislature's budget then to amend. So you wouldn't be making over-target requests, you would be making an amendment. It's always the prerogative of legislators to do that.
So
And
this
that
doesn't-
wouldn't be within the fiscal policy.
So this doesn't impact that at all?
Right.
Okay.
That's
All
right,
right.
yeah.
I got big plans, Deborah.
Yeah, well, I got plans for you, Rich. Anyway, okay. Well, now we actually have it in writing, and thank you to our wonderful clerks. Do we have questions, concerns about this? We ready to vote?
So this change in, I do have a question. So this, I forget what page, 66, that's all that was changed in it from
Yes.
to GO? Okay. Good.
All in favor? That's unanimous, thank you. Okay, we have 18 minutes, so do we want to, there's one more that's not time sensitive, but we've been asked to consider it. This also passed GO? It's the lactation policy. Does anybody mind if we consider that?
Good.
Forward.
You'll get it when you see it, Lee. God, I haven't been through so many policies since I was on GO.
Oh, right.
Good Lord, thank you. Okay, so this is resolution, I guess this would be J. Resolution to update the Administrative Policy Manual, Policy 02-47, lactation accommodations, ID number 11897. Can I get a mover, Amanda, seconded by Mike? Thank you. Who wants to discuss this? Okay. Mike, Lisa, someone?
Go ahead, Lisa.
Well, and Bridget, I believe, is on the Zoom call and was involved in, along with Ruby in updating this, and it's now a requirement that, that we have a policy.
A requirement from the state?
Yes.
Okay.
Under the labor law.
Maybe this is what Mike was going to say, but we did make a change at GO, which I think is reflected in here. This is the current one, right?
Yeah. It's been
Okay.
repaired, yep.
Yeah, okay.
What was the change?
Under the section 3D, nursing a child in the workplace, there was a sentence that said that that's discouraged or not recommended. And we agreed that we don't want to comment on if a person wants to do that. If they feel like that's appropriate, they can, and it is allowable. So we just took that sentence out. I think that's what we said.
Mike? Thank you.
That's
Ann.
exactly right, and I mentioned, New York State actually passed a section of the civil rights law, oh gosh, probably 10, 15 years ago, and made this a woman's absolute right. That's what it was called. And so I would be opposed to anything that in any way sounded like we were discouraging it in any way. That's why I had suggested that.
I think that makes perfect sense. Thank you, Mike. Other comments or concerns? All in favor? That's unanimous.
We're likely to hear about this, I would assume, because I think Bridget told us it was under discussion, but we're going to have locations in each of the workplaces for the privacy.
But there's an undue hardship provision too, right, if it's just too expensive?
Into your microphone.
Okay. There's an undue hardship provision in here. It seems to parallel the Americans with Disabilities Act language or type of principle.
Yeah, I think that's true, but, I think we're going to have a process to see if we can't make it work.
No, we should. We should.
I think by and large, our staff and our departments will be very cooperative about letting somebody have an office space to close the door and take care of business. I don't think this requires the kind of expensive capital changes and improvements that the ADA can impose on us at times. So.
But it sounds like this is more to bring us into compliance than it is to address any concern that's been brought forward.
It sounds like that's the case. Yeah, we haven't had complaints, have we? No.
There's a brand new law this year.
Okay. Well, thank you all, man. We got a lot done today.
We've got 13 minutes left. Are there any more policies? Do some more?
Would you like to make one up?
How about we haven't reviewed the policy on policies lately.
I think that has to start with GO, doesn't it?
No, we can start here.
No, that's all right. All right, well, enjoy your extra 12 minutes now, and I will see you all on the 18th. Be sure to change the date in your calendars. Thank you.